All right, it's that time again. I wanted to show you a student breakdown. This is what I do. This is part of what I do with the one-on-one students. So this is a person who has been around for a while, but always has come and gone from the trading game and has taken breaks in between, maybe still chart watching at times, but not really as engaged with it as he should be because of life, career, things like that. So we're going to call it one of those situations, right? So most people can understand this, how that works, right? Timing wise, taking breaks and all that. So they have knowledge. That's the point. They have some sort of knowledge. Now, is that knowledge actually being applied? We're going to find out. Now, over the last couple of weeks, he's been very dedicated, watched a lot of content, been working to create data. So I'm going to break all this down with you, and maybe you can find your own mistakes. You can find your own weaknesses, and we can kill two birds with one stone, or many birds with one stone, by just kind of talking about what this student is going through. So first things first, history on. So first thing is going to be looking for the entry position. So let's look at, this is what you should be doing, by the way, when you are assessing your own data. We look at what's been done here, right? So we're going to do it by date. We're going to start with, so we got a couple of moments, some shining moments. We got 50 cents a pip at $211. That is a monster of a trade, right? We also got some monster losses, right? So some things that got out of control. Yeah, so what we're going to do here is we're going to look at the actual assets that are being traded. We got gold, right? That's pretty good balance. 4 trades over 4 different days. USD JPY, that's good. UCAD. Yeah, there's no real like hyper focus. So that's a good thing. There's nothing where the person is just forcing entries. Personally, I like to see the trades split up by a day or two, right? That if the person knows what they're doing, I don't care what they do. But if the person is struggling, we want to see an organized thought process. We want to see these trades in the journal. We want to see all that good stuff. Yeah, there's really didn't really fall in love with any asset. So let's break some of these down. Let's see what we can find. Let's see why it is that this person, they've made profit. So I just want to be clear. They started their deposit with $1,000, and now they're at 488. They're at 488 of profit. How much did they lose? That's the question. So the losses aren't that bad in comparison to the wins. I always want to look for the most common wins. So it's not 211, 140, 109. We're going to go here with the median, right? So 63, 50, 50, 40, 37. These are all partials, it looks like. And the doozy wins are right here. The majority of his profit is through these 3 entries right here. So let's see what the losses look like. The losses are pretty good, right? Below the average. And you know, even the worst loss that he had is not as bad as gold's best win, so that's always good. Something that I did notice, $135 lost at 50 cents a pip on USD JPY. Yeah, something went wrong there. So you know what, I'm gonna start with this one. All right, boom. So this is USD JPY. On the screen is all the freaking entries that he's taken on USD JPY, which is honestly not that bad. Let's bring that on screen here. It's 1, 2, 3, 4, 5 entries on USD JPY. Let's see. Okay, boom. We got 1, 2, 3. All right, so person tried to buy. All right, so let's first start out by looking at USD JPY. Just look at a quick glance. We got a nice bearish run, right? That was yen related. We've seen that on JPY. Nice strong bearish run. The market, I'm gonna use different colors for this. I'm gonna go with, you know what? I'm gonna go with a non-fill right there. Boom. So we got USD JPY with a strong drop. Market hits a very strong area of support. Before that happened, he tried to buy here. So this is where the lack of focus comes in. So we got, let's go 2 hour. We got that first buy the student is trying to take a continuation buy, and they eventually get beat by 231 pips. This is the trade. This is the 50 cents a pip trade. This was before the winning streak, it looks like. No, actually, he's done this more than once. Shit. All right, so he definitely lacks like an understanding of where to cut an entry. So the first things first, when we look at this continuation that he tried to pull off here, where he lost for 231 pips, this continuation here could have been cut at the 38 break, at the 50 break, at the 61.8 break, at the 70 break, but it didn't get cut all the way until it retested support. There were so many different moments where this was not supposed to still be held. And if we go to a daily chart and we zoom this in, what we can see is the strong buyer run, what made him believe that it was going to be bullish, the market having a bearish day. When the market had the following bearish day and broke that 70 level, this is done. This is done because the only thing that can happen here is either a match, a retest, a match of price, a lower liquidity grab, and then a buyer run, which means that he is looking at a 250 pip loss no matter what. There was no way that that was going to work out. Now, the low risk probably had him just calm about it, not thinking that it was going to get there, but it did get there. Finally, on the next day, he says, you know what? I just took a loss. I just fucked this up, and let me try to go for the sell. The sell was in drawdown, 77 pips, and in profit, 91 pips. Now, am I a fan of that? No. No, I'm not, because if we look at the reality of the way... See, this is why having an assessment of your entries is so important from someone who is not you. Because if you look at this, yeah, it looks like a win. When I look at the P&L, it looks like a win. But the reality of this is negative 83, positive 90, right? And the worst part of it all was that negative, and then positive. And then what I'd be looking for the person who's showing me like, all right, they're really understanding, is how they use this seller position. That seller position right there as a position of power, as an entry position, because the market has developed a strong resistance, right? Where the market was turning it over into drawdown for this one entry. This is where you pyramid in. This is where you add another entry. This is where you trust your bearish bias. Now let's look at this first bearish entry. He's trying to follow lower lows. Now 50 cents a pip is fine. You know, this is low risk, right? Yep. 50 cents a pip is fine. Eating the drawdown is fine, I guess. But you have to, the next level of all this is following the fib, right? So if I see the fib is like that and it's hitting the 61.8 and then we create a new low and it's still hitting the 61.8, I'm going to add more risk to this, or I'm going to get rid of this shitty entry and look for a better position, right? So that adjustment is a more next level in the moment, you know, as the market is still developing thought. Or maybe the student is trying to go for the swing trade and that's what it looks like, but still room for adjustment on the entry position, which would be right here. The next thing, the sell. So we've already seen a bad habit start to show. Bad habit one, a buy over here. Yes, 50 cents a pip. Yes, decent risk, but we're gonna ignore the fact that the account is $1,000, right? This is decent. This is good. So as far as risk, what I don't want to see is like 5 standards or even 3 standards on a $1,000 account, or 1 standard on a $1,000 account. We want to see pyramid again starting at 50 cents, 80 cents, because they're going to max out at $2, $3 a pip. So this entry, unconfirmed. It had no closure. It had absolutely nothing. It wasn't even on the 38 level when he took it. It was just a continuation attempt, and he let it ride for way too long. This entry, very little confirmation on the sell side, not the sharpest price. Where he lost is where he should have been looking for a re-entry position, because that's where the breakout happened. Doop. The resistance happened. Doop. The resistance happened. Doop. The resistance happened. So if he was paying more attention and in a more, I'm gonna call it like more skillful, more experienced, he would have been able to pivot to this position, right? But being in drawdown or letting it play or having whatever direct approach he had in his mind probably didn't make it obvious that this is what was going on. Eventually, we go even further down. So far we have 2 trades that are inaccurate and also sort of unconfirmed because they haven't reached the real price. When it's down here, all it is continuation of sell. So he's looking at lower lows. If that was the strategy, it's just not enough. But at least it turned profitable because he held it through. But again, sharpness. Down here, this is not confirmed at all. This is the bottom of the barrel, right? The trade's over. The worst part about this is I don't even trade USD JPY on this entry, but I know that we're inside. We have to be because of the way the market is moving. When you look at a higher frame, you're definitely near somewhere that once had strong buyer power, right? So that's what's happening there. Let's go even lower on the frame. Let's go higher on the frame, right? So this is not the place to be buying, to be selling, and he sold right into it. No matter how you cut it, how you slice it up, this is not a great position to be selling from. Let's go back to it. By the way, as you can see, I use MetaTrader 5, but not that much. So that position is, where is it at? Right here. Now this is not good. This is the worst. This is bad, right? This amount of mismanagement, right? Where we take a sell at 50 cents a pip and allow it to draw us down like that. No. So let's talk about cutting it. We take that last Fibonacci, right? Again, break the 38 has to get cut. Break the 61.8 has to get cut. Finds support at some point, right? Back where you were. This is the real sin. It gave you a chance to get out of this and you're still in this. Not good. I don't know what the thought process was. Maybe it was pyramiding in on the Fibonacci level to level, hoping that it was going to continue bearish. But this is not how you do that, right? If I'm going to try that, I would take the fib on the full range fib, on the full range of the move that I'm trying, and I'll start where here. See where he started here? This is a 78.680 level. That's where I would start. That's where I would start trying to run that type of strategy. But if you just try to run the 38 level and thinking that you're going to just sprinkle it in every Fibonacci line, you better be sure about the actual trend, which this person wasn't. We were inside of buyer strength and they still sold. So do I want to have, let me see. I think, fuck this. I'm going to have the full. I'm sorry, but I can't. I'm going to go like that. Oops. I'm going to go like that. I'm going to bring it back to this. Okay, boom. Much better. Much better. So the market eventually goes back to bearish. Let's bring it back to the hourly. Goes back to bearish, runs the sell, shows you the buy. All right, look at that, 61.870 level, and then takes off. So the sell here also good. There's a problem here with exit and management. So what's missing right now already off looking at this between all these USD JPY entries is I don't know the plan. I can't find the plan through just looking at this because there's different levels of drawdown here. So let's look at this. So maybe because they're experimenting with their strategy, they're allowing it to play out like that. But 243 pips of drawdown, too much. That one right there, 92 pips of drawdown, more stable for a participation entry. This right here, out of control, 383. This right here, let's be honest with ourselves. This is why someone looking at them matters. 150 pips of drawdown, eventually profits out for 18 pips, which if he didn't, it would have turned into a disaster as well. This right here was in profit, 141 pips, and then eventually was not. See, this is where the truth is discovered by I was about to call myself the master, like it's, what was that movie with the Golden Globe, The Last Dragon, right? So what's missing out of USD JPY is a defined plan. For this person, having a go with the flow style target hitting like me, where I'll aim for a target. If the market's not really getting there, I'll partial a little stronger. I discern what makes sense as far as daily closes and intraday 4-hour charts, 4-hour closes to let me know whether or not I should cut this trade down. For this person, it seems like they don't have an actual solid, this is the type of risk I'm going for. So what I would suggest for this trader is to, in their journal, to always have a way that they're going to cut this trade. So for example, when the market broke the 38 level, trade's going to get cut. the stop loss has to be defined. Off of this strategy, I would go 60-60. I would go no stop out less than 60 pips, the more than 60 pips. That's my stop loss, 60 pips. If I'm going to be trading at participation, maybe I could push it to 100 pips. The math doesn't really matter where they're at in their career because they got to begin somewhere because all of this is just erratic. So 150 or 300 pips of loss is no way to build an approach, no way to build the foundation of your skill. So you need something that you stick to because you're following a plan. We don't need the perfect plan. We need a plan. So because we could get it to perfect if we begin somewhere. So 60 pips would be where I would go. They're obviously liking the swing trading patience style. So I would go 60 pips for full risk, right? 100 pips for my participation. Something simple like that. Past 100 is ridiculous, especially on USD JPY. That moves what? Let's see how much it moves every day. Let's measure some of this. 195. Damn, USD JPY has been moving. 200. What the hell's been going on with USD JPY? I might start looking at this chart. 189. Right, so it's been moving. Now I know this is a lot of yen news and stuff like that. 172. I might start looking at USD JPY again. Sheesh. 153. 182. My goodness. 400. What? This chart is... I remember when this chart was not... Look at this. Look at this. I had no idea. I never look at this chart. Look at these days. 70, 80, 70, 90 in 2 days. That's what I'm used to. I don't know what the hell. This thing's been taking the steroids, the D-ball, the peptides, all that shit. All right. So for USD JPY, the first thing we've discovered from this student, lack of management plan. I like for beginners that 30-30-30, right? It's not really about the math. Again, you need a plan, not the perfect plan. You need to get used to a certain amount of management. That's the key there. You need to get used to management. You need to get used to holding yourself accountable to being sharp because your stop loss may get hit by where you're getting in. And an example of that is this. This entry right here is shit, all right? Like, this is about as shitty as it gets. I don't care what the thought process is behind it. Again, this is inside of... Some things don't need to be overly explained. This is inside of the... Oh, Lord. Using another platform sucks. Let's go weekly so I can actually see something. All right. This is inside of strong buyer positions. Where he bought is actually the worst possible position he could have bought from. That's right on the money of where you don't want to be. Let's show you something else here. As far as timing of that entry, to see if even that was correct. Now look at this. The market swept for liquidity down here. And then runs back into the seller point. So this person is hyperfixated on this. That's what they're paying attention to. The amount of bearishness that they've seen. The fact that they got squashed on the first buy. The sell worked out, right? Gave them profit even though it was pretty shitty. The sell is in the forefront of their mind. It's a sell. The fact that the market can run the Fibonacci to the downside for a 38 continuation, right? That's what they're paying attention to, but they missed the detail. You're inside of the worst possible place to be selling, so you better be damn sharp about this. So if I'm looking anywhere, I'd be looking here, or like I said, where he got in, that 70 level. That's really where this would begin. You would be embracing retracement. This sell also right there, it goes into profit. So we're just lacking management right now. The lack of reentry here, that's something else that I would, if it's my one-on-one student full-time, I'm questioning him or her on why didn't you rinse and repeat the price? Why did you get the first 122 pips? Nothing happened. No profit, no management, nothing in anything in your journal letting you know that, hey, I'm up 100 pips. If this was my real account, I would have taken this out. And then this is the reentry opportunity for 158, right? So the lack of rinsing and repeating here, the lack of adjusting and rinsing and repeating here, either tells me this person too many charts, not enough management, ain't even showing up for the chart. This whole USD JPY situation, I'm going to say 90% of it lacks management. Let's look at the next thing. All right, so let's look at this gold situation. Now, a lot more winning on this gold situation, but more of the same as far as the entry style. So a lot of 38 continuations here. That's the fourth time we've spotted this. 320 pips to the downside. So they're definitely falling in love with the 38 continuation, the continuation approach of strong trends. This is gold. So to be selling on gold, you better be comfortable on what you've read as far as the seller side. Eventually, I think they realize that this thing is more bullish than anything, and they start trying to buy. Now, right there, 142 pips. Right there, 420 pips with the possibility of 783. Right here, a drawdown of 161 with a profit of 230, but a possibility of 1,140 pips. So why is that important? Well, first of all, just from personal experience, people are afraid of gold. So they're afraid of gold's ability to take away their profits. So when they break into strong profits, they're going to cut trades more, whether winning or losing. So that's one. That's USD JPY is notoriously slow. Whatever the hell it's been going through the last couple of weeks has been because of the yen. But as you saw when we go further in the past, it's a 70, 90 a day tops style chart. But still, solid moves. And it also had the ability to make that person lose 150, 230, 300 pips. So it can still destroy you if you don't do the right things. Gold, you just have to react faster. Gold is faster. So what I notice here is that they're still trading in the same style, right? They're still trying. See, on one chart, they're getting destroyed because they're against the trend. On this chart, they're winning because they're with the trend, right? They did catch this solid sell, but eventually they move over to a buy, and that's what ends up working out for them. Now, why is this just as bad to me as USD JPY when it's all wins? Well, because it lacks like a more management, right? It lacks real management. For example, partialing out, plus wanting, and letting it ride. This person left one, two, three entries with no ability to go to its real target, right? To really get to where it's supposed to be. So for example, this one, I would say at least matching the high for 200 pips instead of 120. For this one, I would say same thing, right? At least matching the high. This person got past that point and still cut it fully. I would have let it ride to where's like a decent cut, somewhere in this vicinity when the market starts to finally slow down, right? Your tolerance, your patience is going to run out. I get it, but that's 700 pips. That's a difference of 300 and something pips, 450 to like 780 something. That's a big difference, right? By you having just 10, 20% of your trade run towards that direction and exit out there, it makes percentage gains. Now, I get it. This is 50 cents a pip. This is 50 cents a pip. But we're building foundation right now for when the real money's on the line. Again, some sort of management plan. For this student, my suggestion is, if you're uncomfortable, I'm saying 60-60, 60 stop loss, 60 take profit, because you're definitely trying to go further out with your trades. You're not trying to partial out at 30 pips. You're not trying to be a hybrid trader like me. You're trying to go for that 3-to-1 risk to reward, that 2-to-1 minimum risk to reward. Fine, no problem. But we want to see that constantly. We also don't want to see this style drawdown, 177 pips. There has to be more rhyme and reason to the management of this, both entering, profit, and eventual exit. All right. So just because you won doesn't mean that this is the holy grail approach. There's a lot of things missing here. Even on this buy, we'll save that for a different moment. All right. So the next chart will be UCAD. These are some wins. We're gonna let me just real quick. So for UCAD, first sell. Now this is a person. This is a different trader, right? I don't know what happened, but now let's go higher frame. We're next to the resistance. We're creating resistance. He started a little early. When people wonder, like, what do you mean habits, right? Let me show you what that looks like. There is a reason why I keep finding the same thing. There it is again. 38 continuation. Now, here's a little secret. I purposely didn't talk to him about every single entry. I wanted to find it on my own. And I'm just noticing this 38 continuation now. Now I'm really starting to pick up on it. Now pyramiding in 38 here, eventual drawdown of 20 pips, drawdown, still Fibonacci's intact, and then they take another trade. But the problem with this is this, all right? It went into deep loss. 60 pips is not the worst, but if I just saw UCAD, I'd be like, yeah, that's fine, you know. But again, management, he got burned on all sides of management. The pyramiding in is solid. That's what it was supposed to be, right? Even going in the negatives, all right, fine. It's not that big of a deal because you're pyramided in and the risk is not that high. No problem. Let's check the risk. Yeah, so it's $1 a pip. No problem. My issue is nothing was held. We just watched gold. He would have had 700, 800 pips. This is another 142 pips on this, right? You have to think about it this way. There's no way to know when the breakout's going to come. We could be consolidated for 4 days in a row, and on the 5th day, it finally breaks out, and it's something insane. Or it could take the whole week, and the next week is when it's going to happen. But you have to place yourself in a position to be there if it happens. It has to be normal to you to just hold some sort of risk when you're in profit. If you're able to partial out, that means you're able to take profit. And here's the other thing that I really don't like. Let's look at situations here. If you take a sell, right? You take a sell, you take a sell, you take a sell. Now you're in profit 60 pips. You're happy. Now this wasn't good enough for this person, or they maybe didn't manage, but it's 21 GMT, so they're awake. They're up. They know what's going on. They eat drawdown, and when the market comes back into profit, that's when they cut it down. And look at the opportunities to re-enter. They're here. Look at the market. It gave them opportunities to re-enter. So by them not taking profit the first time, by them not exiting out fully on this one, this was solid. They could have re-entered here and added even more risk. See, just like on USD JPY, just like on gold, there were moments where if they just managed in a robotic way, they hit a certain profit line, they profit out, they would have had an opportunity to re-enter the risk, so they're doubling up on the same move. That's the hybrid system that I like. You know, you're following market structure as it creates. What I'm not going to like is this drawdown. It happens. It is what it is. But when we break back into profit down here, you're supposed to do something here. Down here, you're supposed to do something here. When it retraces, you're supposed to do something there. Let's go daily so you can really see it. On the daily, you got 1 day, 2 days, 3 days, 4 days, 5 days to figure out that this is the move for you. We would want more on this. And then everything that happened here and there's no re-entry. That also does bother me because there's a lot of trading on other charts. It would have been nice to see some on 3 charts so far. There's been no follow-up to the trend. There's been a lot of drawdown eaten, but no adjustment to that drawdown, and that's a problem. So there's that. Next, US 30. That's a $37 win. It's a sell. Let's see. Daily's not bad. H1. Oh, there it is again. So no confirmation. Ran Fibonacci. Boom. That's a sell. Drawdown, 250 points. Profit, 249 points. Possibility, 730 points. So more of the same, right? Pyramiding in a lot of this is where I would want to see the entry right here. Now the drawdown eaten is fine. That's because he lacks the ability to confirm entries. There's very little closures on his entries. I don't know if you've noticed that, but there's very little confirmation through lower frame. Remember, you want the market to get the higher frame price points you desire, which I imagine he thought was this. Then you want the market to close there for you to be able to hammer down on this. The market then runs the higher high / hidden structure. It breaks the channel. All right. And then it gives him the little drop. It retests the channel. And at no point did he show up again. All right. For a 7, that more of the same. This is the habits that are being exposed by the entries that are right in front of us. NZD USD. All right, couldn't load NZD USD for some reason, but I'm gonna go with NZD JPY because there's a lot of activity here. All right, better moments. Now, by the way, I am purposely looking for the mistakes that'll hurt him in the long run. He got away with a lot of it, but it's also because of market volatility and extreme patience. Some of those drawdowns were 3-4 days. Now, that's because the risk is so low, and it is not real money. Like it's not something impactful to him. So he's playing with just whatever money, doesn't matter. So there's no emotion behind it. There's no urgency behind it. And because of that, he can eat 150 pips of drawdown, 200 pips of drawdown, and not blink twice. Can't do that when you're building a foundation and expected to just be able to keep that style when you go live with real money, real impactful money that's going to make you feel something. So this first sell, right? Again, a little early, but still solid. If they drew the Fibonacci for the breakout to the downside, I like it. That is 98 pips, strong. Eventually, this drop, 353 pips. That being said, he did sell again, which is a good thing. He followed his trend. We got some breaks here. Right, so this is where he sold from. This is where the market creates resistance. This is where he takes profit. This is where I would want to see the person take more entries. But they didn't do that. They took more entries at the lowest point. That's not good. That's showing his newbiness. Eventually, the market retraces. If this was a pyramid in situation, maybe that's okay. But this is just as bad as that sell into gold on the low, because this is right at smack at the low of most recent market. It gave you a retracement. It creates a lower low, and you sell into it. That's not good. It's a person who's fallen in love with momentum. You're going to get squashed doing that. Eventually, the market retraces on them for 86 pips and then drops down and puts them into profit. This is why it's important for you to look at more than just winning and losing, because he won this, but this trade is pure shit. So, and then he does it again. See, this is how we create bad habits. I wish people paid more attention to the little things that are said as well, but that's going to take time, right? Because it seems insignificant. But see this sell here with that drawdown? You think it's a coincidence that they profit? Again, the market retraces for them. They didn't learn their lesson the first time with the drawdown, and now they're doing it again, and they eat drawdown again. This looks like the same shit. It's the same move. I profited out. So this is how habits work. I profit out. I'm like, I'm so happy. Yay. The market keeps dropping. I go, shit, more profit. Then the market retraces. Okay. They ate a bunch of drawdown. Then they go into profit out. Then they go, okay, the market retraces. They see, oh shit, it's going to happen with me without me. I can't let that happen. I just survived this whole situation. So let's do it again. They eat drawdown again. And then they break it to profit. I hate these two entries. Yeah, he won. Fuck it. This is bullshit. Because they had way more control of where they could have gotten in from. If this was a swing trader, I get it. Right? I understand. But it's a person who's definitely on the lower frame, looking at a lower frame. He's using the lower frame, so you might as well use it for what it's for. Right? Accuracy, minimizing drawdown. Eventually, they break it to profit and they get a nice run. Now, again, me being me, I am going to say, for future reference, if you would have left some sort of risk, you have 1, 2, even though crappy entries, and 3 entries. This one's not good either. This right here, these 3 entries, 2 of them should have at least lasted, or 1, for a long-term drop. You know, it started within a 352 pip trend. Now, eventually the person goes, you know what? I like the buy here. All right. Okay. Not bad. Did they hit a critical position? Yup. That's a strong buy. That right there is a good one. So I beat them up for some of this stuff, but this right here, this is the one. That's a solid move. Now, again, me being me, if it would have been me running this chart, I would have said, hey, now it's level to level, right? Now it's trend lines. Now it's all these different things. He takes a sell back when we come back. Let's see that. He took a sell when the market creates resistance. He was up 93 pips. There's a lot of lack of, I guess it's the 50 cents a pip thing, but there's a lack of partialing. There's a lack of profit taking. There's a lot of profit taking when he feels he's going to get +1 or the market's just not doing what he wants. But I don't know what he would expect out of this when the market is still running bullishly, and this is daily wicks, tails, and shadows. Eventually, we get to the high. This is just noise, and he takes, again, a shitty... See, bad habits, right? This is a good sell, right? Could have just been he showed up and it was already creating resistance. I can't give him credit for this because he hasn't done this on a lot of these where he allows closure. This much closure, right? 5-6 hours of closure. That hasn't happened much. The market comes back, takes him out. He tries it again for whatever reason. He decides, screw this. Maybe because he's fearful of the buy, and then he tries to sell again when he starts to see the drop. Yeah, that's not a strategy. You did it once, twice, 3 times. 3 times on one chart. We did it on gold for a more extreme situation. And your profit was taken out here. Oh, he's doing more than one trade at a time. There's a lot going on here. Yeah, this trade is bad. This is really bad. This is garbage. Garbage, garbage, garbage. This is garbage, this is garbage, and this is garbage because it's well within your control to be sharper there. All right, so I was looking at this, and something was confusing me. Why did they take this buy? Okay, it was bothering me. They did everything else on the sell side, and all of a sudden, this student who took these 2 bad trades was able to recognize that the buy was turning over. That was weird to me. It felt a little awkward. And I was like, damn, that's a pretty good trade. I take it back because that's not what happened. What happened was this. Right here. $121 loss. So I got confused by the little sell and the little buy. But the buy was taken out and the sell was held. And that sell is from 87.025 taken at 917 at 742, which is right here. 87.025, 917, basically 7 GMT. That's where that trade was taken. And what we have here is a horrendous trade. This is shit. If I'm looking at this correctly, which I think I am, this is pure shit. So stuff like that can't happen. There's no way. I was like, why did this person take a buy? That was really well done. They did this, they did this, and then they were able to figure out trend switch that quickly before we even broke real structure. I found that odd. But yeah, this explains a lot, right? 352 pips to the downside. That is a lack of management and a half. And then as time went on, they took another one, which is 50 cents a pip at 89554, which is 89554 right here on 919. Yep, I'm reading this correctly. So yeah, this did not. I thought that this was like the savior to the whole situation. But again, winning doesn't make it all happy time. If you want to get better at this, you need to understand your wins and you need to understand your losses. GBP USD time. All right, so let's go with the sell here for GBP USD. Nice, not bad. Short term, once again, eyes are gravitating towards that 38. There we go. Tail end of a trend. Not bad with the exit. And then eventually we take a buy that draws down into 118 pips and then positive 135 with a possibility of 298. So all things for the future as far as understanding how far the trades could have went, better management. Again, the deep drawdown. I don't know if they're going for the pure swing trade, but there has to be, if you're going to go pure swing trade, 100-100, right? 90-90, something like that. I would say that pyramid in starts with the 200. If this was the approach, right? So the approach was, this is going to be my participation trade. I'm going to allow 120 pips of drawdown. If I enter again, it's going to get, the stop loss has to max out at 100 pips. If I enter again, the stop loss has to max out at 80 pips. Like if it's done like that, it makes sense. If there's some sort of math to this, it makes sense. But if this is just, I'm going to try to run the trend and see how deep my drawdown is and then exit out when I feel comfortable, that doesn't make sense. That's not sustainable. We saw that with 300 pip losses. We saw that with how many multi-100 pip losses. That can't happen. There has to be a controlled approach. Again, it doesn't have to be a perfect plan, but there has to be a plan. So for GBP USD, that's it. Next, GJ. So for GJ, we got a couple of sells. Oh, again, at the base. Here it is again. Same habit. I spotted this the moment we started with gold. The first chart that we did, it was just obvious that this is what he's trying to do. There it is again. 38. And now this time, it didn't work. Drawdown 144. Break even. Didn't do anything for any of these moments. Again, people are like this. You're like this. I've done this. Everybody's done this at some point. At some point, you have to decide this is not working. All right? And then the market drops strong and he tries to buy. What's the other habit that we've discovered? No confirmation. This is no confirmation. This is no confirmation. There's no reason to believe it's bullish from here. It's just a price hit. He's just following structure. The market hits a sell point. He cuts it early, and then he takes it late. Same thing we saw in gold, right? It's trending, trending, trending. He just enters, but not before eating drawdown. Again, this is something he's going to have to deal with directly. I can't take trades like this on continuation. It's over if I take trades like this on continuation. If I take this trade and my max risk is 50 cents a pip, and that's the most that I can risk on this chart, that I'm going in at 10 cents a pip because it doesn't deserve more. And if I could go in at 5 cents a pip, if I could go in at fucking a penny, I would, because this is that bad. This is not trading, right? When you enter on continuation like this, it's not trading unless the risk is so low that you're just kind of trying to get that extra kick to the face in, but the person's already on the floor drunk and basically dead. All right, that drunk bar fight conversation we had yesterday, right? This is not something where the person is still standing or even halfway alive. You're just adding to the damage here, but to the win. But this can't be the be all end all entry. It can't. All right, and then eventually again major drop. So this just shows that if they would have just held their initial entry, I'm curious to see why they cut it here, but this one doesn't get cut. It's in profit 81 pips, and then it's in negative 135. Again, there's no rhyme or reason to the management, and it's very easy to get away with this and feel like you're doing something. I'm not saying this is a waste of time, because without this, you don't learn these concepts. Again, not a perfect plan, but at least a plan. At least something's being done that we can fix, and this is how you get better. You don't get better by having it perfect in the beginning. That's fucking stupid. You get better by making mistakes. Without mistakes, there is no growth. It's very few people that are looking to be better at something they already believe they're good at. Right? We need the losses, and you can't have a real account and going through this. You can't. It's not going to happen. So it's either demo or low risk to you. That's it. It has to be something that piques your interest, but doesn't have so much weight on it that you can't even make decisions to let you grow. Next. All right, so I think we get the point now. We're going to fly through some of these last ones. We're going to go with GCAD here. I think GCAD's going to be structure heavy. Yeah, okay. So GCAD was easier to handle, but even that unconfirmed sell, that does go into profit. Not bad. Notice less drawdown, slower asset. But that being said, look what he did on USD JPY. So it doesn't really nothing to do with it. Gold, strong profit, good. Maybe expectation of movement. That's a good one. That's the best trade he's taken. That's it right here. This is the best one. So if you want to study anything on what you should be doing, look at this. That's beautiful. Slight lower low, right on the money. No drawdown. Good solid target. I don't give a shit about the size of the trade. This is managed appropriately. This is it right here. This is it. This is what I'm looking for. Like if I'm if I'm Diddy, this is that young rapper right there. This is it right there, man. This is what you're supposed to be doing. All this other shit, I don't know what. I mean, this is all right, I guess. This is all right, I guess. But this is the high tier trade. Do this. What you did on gold. What you did on what was the one that we just did on GJ. Those late entries, right? NZD JPY that I thought it was better than, and then all of a sudden I realized, oh no, that's the $121 loss. Yeah, those are things that have to go away. This is trading. The same way that you trust no candles and just a fib, you should put trust into strong fib. There's that 38 you love so much. All right, there it is. Strong fib, strong support, daily candle closure support on trend. This is it right here. If I'm Diddy, I'm breaking out the baby oil. All right, that's the good one. Euro USD. Let's look at this one. A buy that's on continuation, not the best, but look, you know that 38 you love so much? There's the broken 38 to the next target. All right, that's not bad if you understand that. If you don't understand that, then it's not good. Then you take a buy at support, which I understand because you're trying to go for the buy. Maybe you look at this as one big buyer zone. Maybe you ran the lower frame Fibonacci. Let me get rid of these fibs right here. Maybe you ran the lower frame Fibonacci, right, just like that, from low to high, and you're like, oh, look, I took this trade. It was in profit, but now I'm in drawdown, so let me pyramid in more risk. I'd rather this. This makes more sense to me. I know this is not super clean, but now I can see what you're trying to do here. The other ones had this crazy drawdown. This one, let's make believe this wasn't full risk, right? It's a pyramid in. You're in drawdown. I mean, if I enter at 10 cents, if I normally rock around full risk 40 to 50 pips of stop loss and I'm full risk, that means that this right here, even at 100 pips, if it's 10%, I don't give a shit. It doesn't matter. I'm just starting, so I'm just letting it play out. So you entering these partials in here, he's entering this pyramid in style in here. This makes sense. Now, once again, you enter here with no real confirmation, but this is the place. I could accept this any day. Eventually, break into profit. All right. Now, you decided that that wasn't good enough for you, and you're gonna take one of these out in profit, which is okay, and then get rid of the shitty one. So maybe you weren't pyramiding in, but I'm gonna say that you were, just for some positive feeling here. CAD JPY, CAD JPY, that's shit. All right, that is not good. That is not good. There is no confirmation here. Let's go lower frame. There is no confirmation here at all. Loss of 124 pips. You already know what I'm going to say about this. I mean, I think my words just locked up for a second out of a quick hit of rage. What the fuck is this? What the fuck is that? This is a drop of 333 pips where, again, habits. Remember, I've said this more than once in the video. Habits, habits, habits. You win in a way that's not right. You win in a way that relied on volatility. You win in a way that was just, it looks like, it feels good that you won, but your drawdown was insane. There was no rhyme or reason to the drawdown. You do things like this where you get away with it, and eventually you carry it over into other trades. It becomes the way you start to trade. Now we got to break this habit. This is no good, right? Let's look at the lower frame. I don't even think it went into drawdown, but still, the position of the entry is no bueno. All right, so yeah, so it never really got out of control, right? It never really did all this, but this is like not the place to be entering. Now, it looks like he realized that was the case, but it's still habits. It's still like the thought of even entering down there. Like, for somebody who knows what they're doing, what the fuck? It looks like he might have fell asleep and hit the keyboard by accident, because there's no reason for that entry to happen. Then he takes another sell that does draw him down, but eventually goes well. And you'd be shocked to find out that one more time, all right, he's in the 38 vicinity. Like, that is what his eyes see, whether he knows it or not. And then eventually some drawdown and eventually breaks even. But you know, the Zapz wants to see either the lower frame Fibonacci engagement for pyramiding in, or the full range Fibonacci engagement for pyramiding in. Something letting me know that this wasn't the ideal entry, and they knew that, so they keep adding, right? That's what we're looking for. Eventually it breaks into profit, and that's that. Let's go with Bitcoin for this strong win. Where are you? Where the fuck is Bitcoin? Okay. So Bitcoin, he took a sell. I know you're shocked that he took the sell at the low, right? So this creates a low. Not bad. Let's go lower frame just to put a nail in the coffin of this conversation. So the market did create resistance. Okay. He's at the tail end of resistance. Not bad. Let's go even lower. Just trying to see the noise, see what he's seeing. All right. So resistance is created at 57,205. He was 300 pips away from that high. The market creates a much better situation after he enters, and he just accepted the drawdown. and never did anything with it. Eventually, the market breaks them even again. So this is what I'm talking about with profit, right? With due diligence. Why we look at it every day. I'm not saying enter every day, but you have to notice that this is how many examples of this now? You don't have to eat all this fluctuation without making some sort of money. Something, right? So you went into the negatives. Okay. You survived that. Now you're positive 1,000 pips. Then you're 200 pips profitable. Then now you've created a strong target. Okay. So now you've created a strong target at this point and you're totally ignoring it. And then the market puts you basically break even, then puts you again into profit, basically break even, and then fucking dumps the profit in your direction. This is great, but this is one of those setups that they handed you a doozy of a setup. You just never did anything with it, which it brings to mind this one thought. If you're having more than one entry running, which is why you can't take advantage of a setup like this, your job is to elevate your skill to the point where you start to focus on the chart that's providing you the trend, that's providing you the real information. You saw some of those trades. They're basically glorified guesses. This is not, right? When he starts, it's kind of a guess, but then the market starts to shift over to showing you that real resistance creation. This was in the beginning of the month. So something's missing there. AUD JPY. Again, same habit. No confirmation, gets squashed. Takes a sell at the bottom, eats drawdown, doesn't adjust, and then profits out, feels good, but it's the same habit that we've seen at the bottom of a trend. Needing volatility, eating unnecessary drawdown, not adjusting to obvious. This is 2-hour candles, which, by the way, I like on MetaTrader 5. Big fan of the 2-hour chart and the 8-hour chart. Notice all I did was double up the hourly and the 4-hour. That shows you how I believe this works. The more confirmation I get, the more time I get to find my setup, to see the market clear as day. We talked about this on our webinar last night. You don't want to be the only asshole there. We use the drunk bar fight comparison. See, whatever. You like to fight, you don't like to fight, doesn't matter. But when there's a craziness happening, you don't want to be the first person standing there nice and healthy in front of somebody who's nice and healthy, and maybe they pull a weapon on you. You are the focal point. You want to be the person that wasn't in the fight and then shows up as the brawl is happening, right? You want to be the person that sees somebody drop and just soccer kicks the crap out of them in the face because there's less risk. You want to know that everyone who's involved in this is already involved. Okay, so when we look at, you want to put yourself in the best situation. Think of it like that, as safe as possible. In trading, when you are selling, where was the best example? The best example was on a previous chart. But when you are selling here, let's just say, or selling here, you're the only one believing that the sell has the real potential of carrying through, because where we're at is not the best place to buy, to sell. We weren't really running, we were running bearishly, but we weren't running bearishly strong because we hadn't broken out from where we needed to break out from. All right. And when he got in, it was still really early. So you saw the market struggling to drop further down. So when the market creates this resistance here, all he has to think about is this is the place where you're going to get your soccer kick in. This is now the easiest moment for you to get in. This is now everyone and their mother looking at this bearishly. This is now buyers starting to give up on the buy and think maybe we're going to get a better price. You got to think of it that way, the perspective of the next trader. So this is where you adjust. Boom. You right here can soccer kick them right in the face. Right here, even when as it was dropping, you are right in front of people who are focusing right on you. And in this example, the drunk with the knife at the bar, he's the market, and you are the trader, and you are all alone. But when there's a bar fight and there's a bunch of scuffling and shit going on, you can catch those freebies. You can catch somebody not looking at you. You can see the person fall on the floor and soccer kick them right in the mouth, and that person's out of the game, right? So this is, we want to put ourselves in the best situation possible. You know, this is not a fair fight here. We don't want a fair fight. We don't want one-on-one versus the market. We want 3,000 to 1 versus the market. right? That's what we want. We want as many traders trying to sell this as possible. We want as many orders on the profit side being profited out. That's what we're looking for there. You're not going to get that at first hit, right? You're going to get that with confirmation. That's why confluence and confirmation is so important. And that is it. Now, in this video, I broke down the student. As you can see, he's made money. Okay, as you can see, he's profitable on this account. I don't give a shit, right? That's not something that matters to me, because the same habits that are creating this false sense of I'm profitable, which, by the way, he's super, he's not going to celebrate these wins, right? The reason that I'm doing this video is because he knows there's something missing here, even though he's profitable, right? He knows something is missing, something is necessary. And this quick consultation could help that, right? Could fix that for him, could make him so much better, that much quicker, because somebody's telling him the truth and showing him the reality, the repetition of habits here. He has created the same mistake over and over on 5 or 6 different charts. Is that an accident? Absolutely not. That's what he gravitates towards. He has to notice too, he loves that 38 continuation. He loves that highly volatile market that's going to carry him through. He has to fix that risk management situation. That's pretty much That's pretty much it. If you see yourself in this student, now you have some things to fix. And if you ever have any questions, all you got to do is reach out. As always, happy trading.